Good morning. Thank you for joining us. So nice to have you back on ET Now. What should we start with, Dr. Raghuvanshi? The performance for the quarter gone by or the inside story on when the open offer will come?
I think the company has consistently performed well, as you said, that it has been a good turnaround story. So I think that is the most interesting part. Having said that, as far as the MTO is concerned, I would not like to specifically comment on that. It's a matter for IHH especially to deal with that, and it is between IHH and the shareholders. So I'm sure they are working on it, and they would try to resolve the matter as soon as they have clarity, both from the legal as well as regulatory point of view.
I respect that, but when you speak to IHH, and again I'm getting comments which are in the public domain, the message what we are getting is that they are in touch with SEBI to get clarity on the open offer. What is your understanding? What was your last formal communication from IHH to you? Because you are the CEO of Fortis, so I'm sure there must be a chain of line there.
Yes, as we concluded a recent board meeting, IHH has conveyed that they are actively pursuing with the regulatory authorities and seeking clarity on the issue. So I'm sure the moment they have those clarities, we will all know at the same time.
Let's talk about the performance for the quarter gone by. Margins at 19%, they've expanded from 17.5% to about 19%. Overall occupancy has gone up from 64% to 70%. What is the right way of looking at these numbers? Because I'm assuming that at the same time last year also, there must be uptick because of COVID as world was hit by Omicron virus. Are these clean set of numbers? And should we compare them if I do a year-on-year comparison because of the COVID factor?
No, your analysis is absolutely right, Nikunj. It would not be fair to compare it with the last year. However, it must be very clear that the COVID numbers currently are almost negligible. So whatever numbers we see is a clean set of numbers with non-COVID work. And there has been a rebound in both the occupancy as well as the surgical work. This is likely to be the trend. One more thing I must say is that typically the second quarter is a seasonally good quarter, and there are variations from quarter to quarter, and we would typically see that the second quarter is always slightly better. Having said that, the numbers also indicate that the occupancy levels are trending towards the pre-COVID level, and we expect from here the numbers to go up to about 75% on the occupancy side, though it will happen slowly. Third quarter, as you know, is a quarter of the festivals and celebrations. So during this quarter, the occupancy levels may not go up so dramatically, but eventually this is going towards 75% occupancy. Many of our hospitals are even currently working at about 75% occupancy.
Dr. Raghuvanshi, allow me to phrase my question in two parts. One is normal business, which currently is on, irrespective of what the status on the open offer is. But what happens to the operational business if the open offer goes through? The open offer, for the benefit of our viewers, is at a much lower price than the existing price. So the open offer, in a sense, is only a formality. But operationally, if the open offer goes through, from IHS side, both in terms of capital commitment, greenfield expansion, brownfield expansion, will anything change? I mean, are they waiting for this clarity? And if the clarity comes through, will operationally something change?
Yeah. So operationally, Nikunj, nothing would change. Only thing at the pace of growth will probably get enhanced. So there is some organic growth and some brownfield expansion, which we have been talking about as I was here last time. And that is completely on track. as you can see from our numbers, our debt position is very comfortable. And as a result of that, we do have an ability to even do a little bit of inorganic growth as well. However, once this MTO thing is behind us, it would definitely open new avenues for fundraise, and that would give us the ability to consider larger inorganic growth as well. And some of the distraction which happens because of this will go away, and that there would be more focus on both operations as well as on growth.
The diagnostic business was in full bloom. Number of COVID tests were high, and that in a sense really added to the sugar rush. What happens to the diagnostic business now that if I look at the industry average, the average decline is anywhere between 30 to 40%?
Yes. So the COVID numbers have gone down dramatically. And if we compare to the last year, same quarter, the COVID numbers have from 28% has come down to almost about 5%. Which is almost negligible. Non-COVID work, if we see the growth in that, there was about 9% growth in the diagnostic of non-COVID tests. So we are seeing a growth on non-COVID tests, the regular business. But because of the adrenaline shot which we got because of the COVID tests, which was in large numbers, that has gone away. So my guess is that the trend will remain so. There is a hyper-competitive space. There are new age players, and the paradigms are changing. The digital channel is becoming an important piece, both for the conventional players as well as the new age players. And I think with all that, there is going to be a little muted growth. However, we do expect that the non-COVID work will grow at a slower pace than what it used to grow before the non-COVID time. And the reason for that is that there is a lot of unorganized business, which in the current competitive environment will gradually move towards the organized sector. And as a result of that, the organized sector will continue to see some growth, though it will not be the way it used to be in past.
Should long-term investors look at a lot of these myopic numbers, which is sequential fall in surgical revenue? Oncology contribution has gone from 12% to 13%. Are these numbers which we look at with a magnifying glass as market commentators? Should we focus on them?
In my personal view, no. Because eventually what happens is that you can control the payer, but you cannot control the case mix. So a patient is a patient. He may be suffering from anything. He may require a procedure. He may not require a procedure. So I think that part is something which is not controllable. So hence measuring that is only gives us an indication as to what was happening on the ground, but it doesn't give an indication as to which direction the business is growing in. But if we look at segments, I think that is an important indication because different segments have different profitability profile as well as a different demand and supply situation as well. Oncology is a segment which has grown very well for us. Orthopedics has been another segment which has grown very well. But the growth in these two segments is slightly different. So when we look at oncology growth, that has been primarily because we have added a lot of infrastructure. We have been lucky to get a lot of very remarkable talent in the field of oncology into our many hospitals. And that is why we see a growth. But oncology business typically is a low GC, low contribution business, but it is a high focus on oncology is because oncology is required a lot The infrastructure requirement is huge, so it's capex intensive, and there are a lot of entry barriers. So most of our hospitals, just by adding some radiation oncology, etc., we are able to convert them into comprehensive oncology center. So that's an important thing. But from the long-term investor point of view, I think what is important to see is the certain metrics such as RPOB, which is average realization. So you would note that our average realization has hovered around 1.9 plus for many quarters, and it has gradually been growing. And that growth has come not from a pricing intervention, but simply because the case mix has changed. So that is a very, very healthy indicator that the hospitals are progressing and growing and are able to do more complex work. And as a result of that, the ticket size keeps on increasing. The profitability also goes in tandem with that.
Raghuvanshi, there are a lot of hospitals which are much smaller than your size, but they are on the block. Either PE investors are investing in them, or there is a M&A which is there. Fortis, my understanding is that it is focused in north, it has presence in west, but it has little presence or little formidable presence in south and almost negligible in east. What is stopping you from acquiring these assets and these smaller hospitals which you know are on the block and you know that can be turned around if they come under your if they come under your wings?
No, certainly there are certain geographies where we have limited presence. Bangalore, we have decent presence. We have some small presence in both Calcutta as well as Chennai. But our focus is in order of priority is NCR, Mumbai, and Bangalore, and followed by Calcutta, Punjab, and Bangalore. So these are the areas where we are looking for such projects. Definitely, we would be able to evaluate them on a project-to-project basis, and there would be some projects where we would be able to make a closure as well. As I have said earlier, that our debt position is very comfortable, and as a result of that, today we can aspire for more than the brownfield expansion, and we are all the time looking at such projects. But then it has to make sense to our overall strategy, which is the geographical cluster strategy. We want to grow in a given cluster and have multiple presence within a given geography, so that we get advantage of both the managerial resources as well as clinical resources and other advantages on supply chain, etc. So that focused growth we want to do. So we are looking for such projects all the time, but they have to fit into the larger geographical strategy of ours.
So just to wrap it up with one final question, you've given us a sense on where occupancy rates are headed. It could be north of 70. When will we see your margins, which are right now at about 18%, 19% to be specific, will go north of 20? Will that happen in this financial year?
We are aiming for that, but I think it may take at least another 2-3 quarters. We have few assets which we need to sort of take some steps with, but our aim was to go to about 20% over next 2 years, but I'm sure that we will achieve that much earlier.
Raghuvanshi, really appreciate your time, and thank you for answering all the questions which really are in a sense important for shareholders and our viewers who really want to understand which way the industry, which way the open offer, and which way Fortis is moving.
Thank you for having me.